Welcome back. You're watching HFO-TV, co-sponsored by AMF Capital, the Baljanik Law Firm, the Butler Exchange Group, and the construction firm J.R. Johnson.
Welcome back to HFO-TV. I'm Greg Frick, partner at HFO Investment Real Estate. This is another edition, COVID edition of HFO-TV. So again, we'll be doing a Zoom meeting and talking with Seth Henderson, Chief Operating Officer of Summit Development Group, their development group. So thank you, Seth, for taking the time to chat with us. This is a little bit different than doing face-to-face meetings, but hey, we're making the best of it. So
yeah, I appreciate the invitation. Thank you.
Maybe give a little background on you and kind of Summit Development of, you know, where have you guys have been and what you've done. Then we'll kind of talk a little bit about kind of how COVID is affecting you guys in the development world and kind of what your, you know, kind of plans are moving forward.
So quickly about me. My background is I started in general contracting, grew up in the Bay Area.
Okay.
Worked for Rudolph and Sletten for a while after getting my BS in civil engineering in the Midwest. Kind of learned the means and methods of construction. Then pivoted over to construction management, owner's rep. Ultimately moving up the food chain to get to developer. Worked for the Hanover Company for a while in the Bay Area. About 10 years ago, moved my family up to Portland. And since I've been here, been doing predominantly multifamily, mixed use, and a couple of smaller development firms.
What brought you up to the Portland area? Was it family? Was it just change of life?
Quality of life.
Yeah.
My wife and I were both working probably 60 to 80 hours a week. Our daughters were 1 and 3. I actually enjoy seeing my kids as well as my wife. So we realized we needed a change, and we had probably a dozen metro areas in the United States that we would be willing to move to. And whoever got a job first, we were going. And so opportunity came up in Portland, and so we were off.
The I-5 train coming north. Yes, we see a lot of that.
There you go. Don't hold that against me, please.
Yeah, there's a lot of people from down south that are up here. So, I mean, in our world of multifamily, we need immigration. So.
Yeah, absolutely.
Yeah. And then with a little bit about Summit, we've come across, we've done stuff before and looked at, but maybe give the audience a little rundown of kind of your multifamily and kind of stuff that you guys look at doing.
My 6 weeks there rundown. Yeah. So Summit Development Group is a extremely diverse developer in terms of the types of projects that we are engaging. That's one of the things that attracted me to them. So right now we've got a 104 unit project in construction out in Gresham. So that's pure multifamily. We've got a project in entitlements, Vancouver Waterfront. That'll be mixed use, probably 240 units. We've got the NIR project, which is a 10-story engineered plywood biotech lab on the Inner East Side. And then we've got about 80 acres locked up down in Oregon City for a large mixed-use entertainment development. So in terms of development, that's extremely diverse.
Yeah, very much. Yeah, you guys kind of covering all the aspects there.
There you go, which is a good thing.
Definitely in this market. Oh, for sure. Yes, for sure. That was definitely. So it's interesting you said like the waterfront in Vancouver. Is that the part of the old Boise Cascade site and part of that part?
That's Graymore's master plan up there.
Right.
And that is a really interesting, smaller kind of eco environment. So
yes,
there's 2 multifamily projects up there that are currently operating. That's River West and Rediviva. And when you look at the demographic of the people that are currently in those 2 multifamily developments and what type of rents they're getting, it's astonishing. So you look at the concessions in Portland, and I think part of this is obviously the first 2 significant high-end market rate developments. So as additional developments are created there, there'll be some more competition. I don't think you're going to see the rents that they currently have. But you go across the demographic, and it's people that are looking for the tax implications of living in Washington, want a metro area, but don't want, San Francisco or Seattle, want to stay on the West Coast. And a lot of them are coming from Midwest, South, East, and they're coming from rents that are, multiples of what we are charging. So they come and they see, hey, $3 a square foot in the Vancouver waterfront, and maybe their rent is 2,100 and they're coming from 3,000 a month. They're like, this is terrific.
Right.
So you look at the mix of the units, the one bed, one bath den, which is kind of a death knell for efficiency in city of Portland. They can't build enough of them. I mean, that's the first unit that rented up.
So for you guys, are you looking kind of that same demographic coming into Vancouver, talking about that project, or?
Yeah, well, that's the best market data we have right now, right?
Right.
Who are the people that are moving into those two specific multifamily developments, and what are they looking for? And yeah, so we're basing our program. We've got a partner that's from the Midwest that's done heavy urban, high rises, much smaller units. What I would think is more applicable kind of to downtown Portland. So we're trying to find that sweet spot in the middle where people go, hey, I really want to live in this emerging Vancouver waterfront. I want the tax implications.
Right.
I can afford these larger units. What do you guys have available? What is the lowest entry point?
And I remember talking with Gray more about this when they were, planning this and asking about kind of the unit mix and what you thought. And I remember discussing maybe going bigger, just because I think you're going to get, you are getting more people from a tax standpoint. It's maybe not quite that young, fresh out of college type group where they're in the smaller footprint. Now that you've got some of those, maybe those will fit in better. But I think initially, I think they're right on about going a little bit bigger on the footprint. Because again, I think it's an older demographic that's probably in there when you look at those Class A versus what you're seeing in more of like a downtown Portland.
Yep, absolutely. The other thing that's interesting is, in regards to COVID-19, you're seeing more companies realize that people can work remotely.
Right.
So if you have that ability and you're moving 20 minutes north and getting the tax implications, you want a larger unit. You want a unit where you can set up an office. And I think that's part of why these one by one plus dens are doing so well.
So in terms of, you kind of segued right into COVID-19. Are you looking at, from a developer standpoint, you're developing, trying to figure out what's going to be the need in 18 to 24 months? What do you see as some of maybe the changes that have happened now that maybe have woken up some people to say, hey, maybe I can work from home. Maybe I don't need to be in the office 5 days a week. Is that changing how you're looking at designing some of these multifamily? We'll talk a little bit about urban, then maybe talk a little bit about your suburban stuff in Gresham, which is a different kind of demographic.
Yeah. Even before this occurred, let's say in the last 3 months, you were seeing many more developers as part of the amenity package have a work area. Right. And that was a demand, even in downtown Portland, that was a demand that was coming from tenants. So people are looking for the opportunity to live and work from the same physical location.
Yeah, I know we've had some discussion with some various kind of management companies in terms of what do you do from a shared amenity factor, and what does that look like? Or is the common workout facility, things like that, is this going to be something you do? Is this something it's how that's going to work? I don't think anybody really knows, but it'll be interesting how that kind of changes in the next 12, 18 months.
Yeah, there's a lot of speculation right now, right? Yeah. People are trying to be patient, assess the data that's coming in, and figure out what is their approach going to be going forward.
And then with your experience in terms of, you guys like to do a very big cross section of different, you're not just a urban infill, you're not a suburban. What are the different things if you compare like your urban deal with, East Multnomah County, Gresham type, more project? What are the things that kind of drives that one, which may be different for people that don't really know the development game that well?
Yeah, so Gresham right now is really considered workforce housing.
Yes.
So you're looking at what are the average rents? What are people willing to pay on a monthly basis? And it is substantially lower than what you're seeing in the city of Portland, and there's a tremendous need for it. Talking about the Bay Area, having grown up there and seeing how your average worker was pushed further and further outside of the urban core. The anticipation is that unfortunately that's eventually going to happen in Portland, right?
Right.
And so Gresham is a logical location currently where quite a few of these people already live, but will continue. You'll see the density pick up. But it's definitely a different market point in terms of, the finishes, what people are willing to pay for, what people have the ability to pay for. So that is it is a very different market in terms of what you consider market rate and what the finishes are that you're building to. Not nearly as amenitized as the downtown.
Right, is what you see for what's needed, yeah, on the workforce housing.
Yeah, you're looking at what typically as garden style, right? So it's
Right.
it's the walk up. It's usually 2 stories, and it's very efficient construction.
Right. Okay. And then we just had some conversations with some economists and talked about changes. Some of this was going pre-COVID-19, where we saw, a peak in construction permits in the multifamily side. Some of that's tied towards, inclusionary zoning being in place and people rushing in. But we were seeing it down. Now you've got this. Are you seeing changes in costing as you're looking at new projects? Have we seen because last few years we've had quite the run up in annual cost and delivering these projects. I mean, what do you see today, and how are you guys factoring that in the next year in terms of what do you think costing will be on some of these projects?
That's a great question, and a question that I've spent a lot of time on in the last month. So who are the best people to talk to? It's the general contractors.
Right.
So I pick up the phone and I call those guys and I say, hey, what do you see currently in the market? What's going on? In the development world, the finance side sees everything as supply and demand. So they go, hey, supply is dropping off. So clearly hard costs have to drop off as well. And that's just not the way it works. So Portland is a very unique market where the union and non-union can kind of go back and forth. So you're competing for the same constrained labor market as far as skilled workers is concerned. The other thing is you don't have this giant group of general contractors where you have 5 guys that only do schools and 5 guys that only do office and so many guys that only do multifamily. They cross over a lot. So what they're seeing currently is their 18 months of built up projects is now down to 12 months. So they still have a 12-month backlog of projects because these guys have the ability to go out. You've got the school bonds that are still going, right? And so there are still sectors where they can go out and bid on work, and the funds are already established and sitting there.
So because they're more diversified, they're not the effects of an individual, multifamily versus this. They've got the ability to pick it up, but the negative side of that for multifamily developer is things are slowing down. I would assume, they've got more capacity, but if they're picking it up on something else, whereas opposed in other markets where they're more specialized, multifamily development goes down, they're, quote, hungry for more, building. So
right. And so Joe's painting. Does he care if he's painting a wall at a school, a hospital, Port of Portland, OHSU, right? So those guys are continuing to be busy. Now, what has occurred is quite a few projects have either been canceled or put on hold. And so what that does is it leaves an immediate gap in the production for both the GC as well as the subcontractors. So if you're a developer that has the ability to pick up a permitted, entitled, ready to go, shovel ready project, you could get significant savings. If you are starting a project now, going through entitlements and design, anticipate breaking ground in a year, and think that you're going to have tremendous savings in a year, you're going to be competing with everybody who's delayed projects and are starting them, everybody else who's picking up projects right now. So I think that's a huge fallacy. Raw materials have gone down, right?
Okay.
Less being produced right now. However, that doesn't necessarily mean the produced product price is going down, especially since these factories have been shut down. So I think what you're going to see is a leveling off. I think a lot of people are hopeful. So you look at the stock market the last few days, right? That's not based on data. That's based on optimism. And so I think there's a lot of people out there that are saying, hey, these projects are being canceled. These projects are being put on hold. There has to be additional capacity coming on the market, and therefore the prices will drop. I don't think that's going to happen unless you see a deeper recession. So, if this goes another 6 months, so suddenly the backlog for the GCs and subs is down to 6 months.
Then you see a different kind of play.
they're going to be much more aggressive, right? They're going to start getting nervous. But I don't think you're going to see that immediately again, unless you have projects that are immediately ready to break ground. And then I can tell you there are a lot of hungry people out there because they have crews immediately available.
Got it. Right. And then you brought up the financing side in terms of how they look at things. I mean, what are you seeing on the financing side in terms of for projects? Is it, in our world on the acquisition disposition, you're looking at, higher reserves, lower LTVs. The rates are great, but the amount of equity put into the project is significantly more than where we were, 60 days ago. Are you seeing the same thing?
Exactly. Yep. You nailed it. So financial markets do not like uncertainty, right?
Exactly.
And so when there's risk out there, the lenders, your equity partners, they're saying, okay, how can we protect,
Right.
you know, how do we address the unknowns and the risk that's out there? Well, the easiest way to do it is, hey, developer, put up 40%
let's score in the game.
equity, right?
Yep.
So now we have to burn through all of that before we're at risk. So that I think is where you're really going to see the construction lenders going here.
Right. So you may, like as I was telling some, you may see some of these smaller, less capitalized developers have a hard time moving some of their projects or getting going, where again, it's kind of similar like on the construction. We've got some bigger players, but they're kind of in everywhere. So we'll see how that all shakes out.
Yeah, I've heard of confidentially some very large projects, 100 million plus in Portland, where the financer has walked within a month of breaking ground. And it doesn't mean that they wouldn't be willing to finance that maybe in 3 months. But today they go, sorry, there's just too much risk. And we're not willing to put that cash out there.
So as in your role now, I mean, what do you, in terms of you guys got a pretty full plate, but I mean, what kind of opportunities are you looking at now in terms of where we are? Is it kind of a, hey, let's get what we have going and then we'll see where this kind of shakes out in 60, 90 days? Kind of what's on your horizon in the short term?
Yeah, so we're fortunate that we have some very deep-pocketed equity partners. And so whenever something like this occurs, the first question that's asked is, where are the opportunities going to be?
Right.
And so some of these partners are opportunity zone partners. They have huge OZ funds. And I'm sure you're fairly well educated and understand what the intent of OZ was and how it's actually being enacted. And Portland is a very unique place in that a lot of the downtown
got put into it.
Got put into this OZ overlay. Exactly. So when they're looking at maybe slightly reduced returns because there's some uncertainty regarding rents, how many people out there are going to be able to pay rent going forward? How many people are going to lose their jobs? What is the revenue going to be? They've got a little more cushion there because of the tax implications of the OZ. So they are sitting back and they see opportunity. If you think back to 2009, it was tough. If you think about 2010, it was bloody. And so there are some people out there that are currently imagining, next year being a time period where there are a lot of people today. We have conversations with developers and individuals who had pursued a development, are unable to get the capital to execute, and are saying, hey, help me out here, dollar for dollar, buy me out.
Right.
What you're going to start seeing if this depression continues or recession next year, maybe it's 75 cents, 50 cents, right? And the people that are brave enough, if you think about the individuals that went out and did development in 2011, right? And they hit that sweet spot where they picked up deals for pennies on the dollar and then also got the advantage of the reduction in hard costs because GCs were hungry.
Yep.
And had the huge bump in rents because nothing had been produced for a period of time. As you know, those individuals did very well.
Yeah, though like you said, we may not see that huge reduction in hard costs. It just, a little bit, but still, crisis and things like this breed opportunity. It's just, how it works and how you get into it. So, yeah. Well, thanks for taking the time to meet with us. It was a pleasure. I'm sure we'll be in touch. If we've got questions, they can find you on the website there listed below. And thank you, and we'll get together again. Thanks, Seth. That was good.
Be safe, be well, and
too.
hope for the best.
Exactly. Hey, thank you, God. That was great.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.